The investors who panicked today lost nothing. Think they did? This morning, Meta surged 9.73% in a single session. Reddit jumped 11.73%. Fortunes made in hours. And while you watch those green numbers climb, Crown Electrokinetics collapsed 13.37%. The VIX sits at 16.38. Calm. The market isn't panicking, but you are. Here's what nobody tells you about days like today. The damage isn't the money you didn't make on META's surge. It's not the loss you didn't take on Crown's collapse. The real cost is invisible. It's the 47 seconds you spent calculating what you could have made if you'd bought Meta yesterday. It's the 3 minutes refreshing your portfolio. It's the mental energy spent replaying a trade you never made, convincing yourself you saw it coming, building a narrative about the opportunity you missed. That energy, that attention, that emotional bandwidth, that's your scarcest resource. And you just spent it on something that cannot be changed. Marcus Aurelius wrote, "You have power over your mind, not outside events. Realize this, and you will find strength." 2,000 years before ticker symbols and trading apps, he understood something modern investors still refuse to accept. The market doesn't care about your feelings. It doesn't respond to your anxiety. It cannot be controlled by your attention. The only variable you control is your response. Not the outcome, just your response. You think checking your portfolio 6 times today is harmless. You think watching those percentage changes keeps you informed. But every time you check, you're training your brain to believe your intervention matters. You're conditioning yourself to react. And reaction is the opposite of strategy. By the time the market closes today, the S&P is up 0.09%, NASDAQ down 0.28%, Dow up 0.32%, functionally flat. But your emotional ledger? Exhausted. You've spent more psychological capital today than the market moved. The problem isn't that you feel emotion. The problem is you think feeling it means you should act on it. You've confused awareness with urgency, and that confusion is costing you years of compounding returns you'll never get back. Let me show you exactly what I mean. Marcus Sterling sat across from Alex Chen in his office on a Tuesday that looked exactly like today. The market was calm, boring even. Then at 10:47 a.m., Alex's phone lit up. News alert. A tech company he'd been watching, similar market, cap to Meta, announced earnings that crushed expectations. The stock jumped 9% in 90 minutes. Alex watched it climb. 9.2%, 9.5, 9.8. His hands were sweating. "I should have bought yesterday," Alex said, not looking up from his screen. "I was looking at this company. I had it on my watch list. I knew they'd beat earnings." Marcus didn't respond immediately. He was reading, not market news, meditations. The same worn copy he'd read for 30 years. He let the silence sit until Alex finally looked up. "You didn't know," Marcus said. "I had a feeling." Everyone has a feeling after the outcome is visible. Do you know how many feelings you had this month that were wrong? Alex didn't answer. That stock you're watching climb. Do you know why you want to buy it right now? Because it's moving. Because I'll miss it. Exactly. You want to buy it because it already happened. You're not investing. You're chasing validation. You want to feel like you're part of the movement. That's not strategy. That's social anxiety with a brokerage account. Alex set his phone down. So what would you do? Nothing. Nothing? I'd do exactly what I did at 10:47 this morning. I'd acknowledge the information. I'd feel the impulse. Then I'd return to my existing strategy, because my strategy wasn't built for days like today. It was built for decades, like this one. Marcus Aurelius wrote, "If you are distressed by anything external, the pain is not due to the thing itself, but to your estimate of it, and this you have the power to revoke at any moment." That stock climbing 9% isn't causing your distress. Your belief that you should have predicted it is causing your distress, and that belief is a choice. 3 hours later, Alex's phone lit up again. Different company, similar to Crown Electrokinetics. Down 12% in an hour. Regulatory news. Unexpected. Brutal. Alex owned 200 shares. He watched his account value drop in real time. 12.4%. 12.9. 13.1. This is different, Alex said. This is real money leaving my account. Is it? Marcus looked up. Did you need that money today? No. Did you need it this year? No. Then nothing real has happened. The price changed. That's all. Price is information. It's not instruction. You're treating it like a command. The market dropped the price. You think that means you must respond, but the market doesn't know you exist. It's not sending you a message. It's just showing you what other people are willing to pay right now. And right now has nothing to do with your strategy. But what if it keeps dropping? Then it keeps dropping. What does Marcus Aurelius say? Confine yourself to the present, not the future price you're imagining, not the past price you're mourning. This moment. Right now, in this moment, do you still believe in the reason you bought this company? Not the price. The reason. Alex thought for a long moment. Yes. Then the price is irrelevant. You're not trading. You're building. And buildings don't get constructed by checking the foundation every 3 hours. By market close, the stock that surged 9% gave back 3% in the final hour. The stock that dropped 13% recovered 1%. None of it mattered. What mattered was that Alex spent the entire day emotionally hijacked by numbers that had nothing to do with his actual investment thesis. He made 0 trades, but he paid the cost anyway. Attention, energy, peace of mind. The invisible tax of emotional reactivity. Marcus closed his book. The market is calm today. VIX at 16.38. No crisis. No panic. But you panicked anyway. Not because of what happened, because of what you thought it meant about you. That's the only battle that matters. Not predicting the market. Controlling your response to it. Here's what you do next time you feel that surge of FOMO or that drop of panic. You don't fight it. You don't suppress it. You acknowledge it. Out loud if necessary. Say, I'm feeling urgency. This urgency is not information. It's biology. I will return to my strategy. Then close the app. Not forever. Just for 4 hours. If the opportunity is real, it will still be real in 4 hours. If the crisis is real, 4 hours won't destroy you. But those 4 hours will break the conditioning that your emotions require immediate action. You're retraining your brain to separate feeling from doing. That separation is worth more than any single trade you'll ever make. Write that sentence down. Put it where you'll see it before you open your portfolio. I have power over my mind, not outside events. Not inspirational, functional. That's your firewall between stimulus and response. That's where wealth gets built. Your emotions are costing you more than any market crash ever will. Next video proves it.